You're about to join Jerry Parker, Moritz Siebert, and Niels Larsen on their raw and honest journey into the world of systematic investing and learn about the most dependable and consistent yet often overlooked investment strategy. Welcome to the Systematic Investor podcast series.
Welcome back to this week's edition of the Systematic Investor Series with Moritz Siebert and I, Niels Larsen, where each week we take the pulse of the global market through the lens of rules-based investing. For long-term listeners, our conversations are intended to keep you focused and inspired to continue your trend-following journey. And if you're newer to the show, our hope is that today's episode will trigger some curiosity to check out the back catalog and all the past episodes that you may have missed. Today we bring you another guest, a guest that for some needs no introductions and for the younger part of our audience may not be a name that you are familiar with. Our guest today is Nick Leeson, who made headlines around the world back in the mid-90s for his trading. Nick, welcome to the show. It's good to have you here. And of course, good afternoon to you, Moritz. Hope you're both doing well.
Hello, Niels. Good afternoon. And hi, Nick. I think you're in Ireland, so good afternoon to you. Great to have you on the show.
Yeah, looking forward to it, guys.
Likewise, Nick. Now, we have lots to talk to you about, of course, but as usual, we're going to do our quick run-through of the week in terms of what took place inside the trend fund portfolios that we work with. So let me suggest to you, Nick, that you take an extra sip of your coffee whilst Moritz and I just do a quick run through. Now, of course, yesterday and this entire week, I guess it was all about employment, or maybe rather unemployment, as the markets digested the long anticipated numbers from the US. But, despite a drop of 20.5 million in non-farm payroll, and the jobless rate climbing up to 14.7%. And by the way, also negative revisions to both February and March numbers of some 210,000, making it the worst ever employment report. The equity markets closed out on a strong note this week. For instance, we now have the Nasdaq up 40% from its March low and only a few percent away actually from its all-time high, with other US, I would say mainly US equity indices in close pursuit. Something else that I thought was interesting that happened actually yesterday was that for a brief moment, some of the US interest rates, namely those in the spring of 2021, went slightly negative, perhaps maybe as a consequence of the latest GDP Now tracker from the Atlanta Fed, showing an annualized 34.9% decline for the second quarter on a sequential basis, and that's compared to only a minus 17.6% from their Tuesday update. But as one commentator from JP Morgan Asset Management was quick to remark, negative interest rates have not helped the Japanese economy. They haven't helped the European economy. So with all that in mind, Moritz, how was your week?
Good week, bad week. The markets are upside down in my opinion, but my opinion doesn't really count, like you say. I mean, NASDAQ, I got bounced out of my short. NASDAQ is now positive year to date. Who would have thought that? No virus for the NASDAQ at least. That index doesn't have any fever. And oil markets recovering. They've more than doubled from the lows in the June contract. So it's remarkable how that recovery is taking place and how risk assets are recovering. And good news is we don't have to think about the reasons. We'll just, follow our systems and our rules. So obviously I've lost some money by still being short some of the equity indices being short crude. Obviously that didn't help last week. Also lost money by being short live cattle. Some of the good positions I had on, long bonds, the gift that keeps on giving. I've said it before. Long OJ, short emissions, all of that stuff worked. But at the end of the day, bottom line is a bit more than 1% loss for the week. I'm now up 2% year to date. It is what it is.
It is what it is, absolutely. I mean, it certainly was it is a really strong reversal we've seen in the equity markets and other sort of risk-on markets, I guess, like energy and some of the commodities that you mentioned. And in fact, this week, there wasn't many markets that went down, actually, maybe except for the index of fear, the VIX. For our strategy, is very much similar story as to you. Small drop in performance for the week. And, that came really from energies. things like copper, live cattle didn't work out very well this week. And then short-term interest and actually the VIX itself were kind of the best markets on our side. Anyways, enough about all of that. Now let's turn to you, Nick. I think it's true for most of us that in life, a few decisions can really shape and define our lives. And I wanted to start out by just asking you what you believe to be some of these key decisions that have shaped your life so far.
Well, I mean, for me, obviously, moving to Singapore all those years ago was the start of things going wrong for me. So there've been a number of decisions that have continued from that time that have led me to where I am now. So from a business perspective, a lot of the decisions at that time weren't particularly good. There was a lot of bad decision making that was often compounded with even more poor decisions over that period. And basic test of my honesty and integrity very early on. When I was in Singapore, and I was probably of an age at the time. I was 25 years old when I was in Singapore, where I probably wasn't as equipped as I could have been to make some of those decisions. And it's and I'm not going to blame youth. I mean, it was they were my bad decisions. And there's some simple things that you can do. I mean, we've all worked in big firms and big organisations, and my belief is that you're always surrounded by people that can help. And the most simple thing that you can do most of the time is ask for help and advice. And I never did that. I thought that I could cope. I thought I'd be able to work my way through the situation. I didn't really have any idea of what each day was going to entail, but I thought that I was able to do that. So it was that youthful bravado that you were able to cope with everything. And that was probably the first decision in not asking for help and advice. And I always, as I'm talking around the world and doing different things, that's I try to impart that to everybody as much as I do to my children. Always ask for help and advice. I'm around, and I can you might not always agree with me, but I am always right.
Yeah. No, I mean, and as I think I mentioned before we pressed record, I mean, Moritz and I have not talked about our questions today, so I'm going to continue just a little bit just on my side with a couple of more questions, just to frame the conversation, get a little bit of context. Of course, some listeners will be familiar with a version, I would say, of what took place during the 3 years you were in Singapore. And I think time-wise, I think we're talking 92 to 95. But on the other hand, we also know that, what you hear, and certainly when you don't hear it from the horse's mouth, may not actually be the accurate, version of things. And I don't want to spend too much time today really talking about that as such. But I know you've been asked this a million times, I'm sure. But if you don't mind, just spend a little bit of time of sort of summarizing, that period, just for context, if that's okay.
Yeah, sure. I mean, I left school at the age of 18, so I didn't go to university. I went straight to work in the city. Rocked up at 15 Lombard Street for Coutts and Company, which was Queen's Bank. Like I say, hadn't been to university, so it was just into the city of London. It was the Big Bang era, so there was lots of change. There was lots of new banks coming into the city. There was a shortage of people, really, that were skilled to work in those particular environments at the time. So there's lots of people changing jobs on a fairly regular basis. So I was at Coutts for a couple of years. Then I moved over to Morgan Stanley. Morgan Stanley was an account that I looked after. So they offered me a job. I went to work for Morgan Stanley for a couple of years, and then was headhunted to Barings. And futures and options derivatives were one of the growing sectors within the industry at the time. And that's what I was specialising in to the latter part of my stay at Morgan Stanley, and Barings were quite big in the Japanese warrants market. That was where they made most of their money at that time, but they were expanding into futures and options. So they wanted somebody initially to come over and look at their control functions and their back office functions and run those. And then from there, I moved around the globe with Barings and worked in Hong Kong, Indonesia, Korea for a short period of time, and Germany. I was in Frankfurt for a little bit of time. And then eventually ended up running the futures and options operation for Barings in Singapore. And I was 25 at the time that I moved to Barings in Singapore, and I was 28 at the collapse of the bank. So, and it was in that short period, as you mentioned, between 92 and 95, that I racked up something like £862 million worth of unauthorized losses that led to the collapse of the bank. But it was, and again, the blame is all mine, and I never want to try to detract from that, because it was me that took all of the trades. As you alluded to, there was a lot of sensational reporting at the time that might not be completely accurate. It's not a million miles away from the truth either. But it was, it was a period of excess in some degrees, but it was also a period where the controls weren't particularly good. Nobody was really focused on what was going on, and nobody asked difficult questions. And so it was easy, as wrong as it was easy to lead people along a different path and not really interrogate the numbers that were being handed back to head office. If it doesn't take an accountant to do this, but if you look at some of the headline numbers, the position that I held, the amount of margin that I required, the amount of the capital base that I was using, or the amount of the bank's capital that I was using, if you really look at those, even from a very superficial perspective, they don't make sense. But nobody was doing that form of interrogation within Barings at that time. It was all about, getting to the market quicker than anybody else, trying to make the money quicker than anybody else, and the controls and the infrastructure weren't as good as they should have been.
Yeah, no, absolutely. So, just staying on some of these points for a little while longer. Often when you see big losses happening today, and they still do, it's very often in these kind of quote unquote complex products, like structured products. And of course, we all had to learn about subprime and its complexities during the great financial crisis. But you were trading futures and options, and I've always thought that when these products are described, at least in textbooks, it sounds much more complicated than it really is. And I'm guessing that this perceived complexity by the people who were supposed to supervise you had no clue really about what you were trading or what their clients were trading. What's kind of your recollection of this?
Yeah, there's definitely a little bit of that. I think there is this, or there was. I don't think it's true anymore, but there was an aura of complexity around it that really doesn't exist. If you spend a bit of time to understand the markets or understand the products, they're very easy to understand. There's, in the modern environment, there are degrees of complexity now that have moved on from those. What I was trading was very vanilla futures and options, so they were quite simple to understand. And from an accounting or from a risk management perspective, it was just simple accounting and making sure that when you add two numbers together, they equal a third number. It was that simple, but people weren't doing it, and that idea that they were complex may possibly have been one of the reasons that they didn't look as hard as they should have. But it was just, it was incompetence and negligence on a grand scale, and it existed everywhere within the organization at that time. I'd worked in Indonesia for Barings. Prior to that, I was in Jakarta for about 15 months, and Barings were by far the biggest equity trader down there at that particular point through one of the local brokers, and we had £250 million worth of unsettled trades because the script that we were receiving from brokers wasn't in good order, and when we tried to move it on to the end buyer, they wouldn't pay for it. Their bank wouldn't pay for it. So that was what we were down there trying to solve. So it's a story of always, trying to be there first, but not having the infrastructure in place. And, that's probably what came home to roost eventually in the end. And, as much as I wish that something else had happened, that's what that's what my life is about, unfortunately, these days.
Of course, yeah, sure. I want to bring Moritz into this, but funnily enough, I mean, if you could talk about funny, but when I was doing a little bit of research prior to our conversation, I saw somewhere that there was another guy called Nick that brought Barings to its knees. He was called Nicholas some Bauer or something like that, where he had managed to get them to invest in some Argentine sewer system back in the day. So I don't know, crazy world. Moritz, what do you have on your mind?
Many things, but now that you've mentioned Jakarta, I wasn't aware when I was reading up a little bit. I know that you were trading on the former SIMEX exchange in Singapore. I wasn't aware of the fact that you were in Seoul and Frankfurt and Jakarta, and you were saying you traded equities in Jakarta. I've never really traded any Indonesian market. I mean, what type of activity is going on down there, and what were clients looking to do?
Well, I mean, Barings had a name at the time. Now, I wasn't trading. We were down. I was in Hong Kong at the time, and what we were trying to initially solve the problem from Hong Kong. So it really was a case of everything was script traded. So everything was, every piece of equity was on a piece of paper. They were bearer certificates. So as soon as you had the buy-in and the selling broker had put their stamps on it, effectively whoever held that piece of paper could receive the money for it. So it was as crazy. It was for me at the age that I was at 20, 21, 22. It's quite an exciting time, but it was really, really crazy. It was dangerous. We had a bodyguard called Tino who was with us at all times, and he was armed. So he would pick us up from the hotel in the morning, take us to the office, and the first thing that you were told when you arrived at the airport was not to put your hand out the window, because if you had a ring on it, somebody would cut your finger off to get the ring. So it was quite a dangerous place. But there was it was 1991. It would have been 1991. I was in Jakarta. So it was all of the booming tiger economies. So it would have been the Philippines, it would have been the Indonesia, Singapore, all of those type of areas that were on a huge growth and on upward trajectory in terms of what the equity markets were doing. And Barings had a name for doing really good research, having the best research in the market, and then facilitating the orders. So the orders would come from Denmark, from clients that they had in Denmark, and they just wanted a bit of exposure in that region. But the problem was we were receiving, we had a bank that we were receiving the script for us, and by the time we tried to move it on, we found that half of the signatures were missing. So I think that the majority of my day was with a black legal sort of briefcase which was handcuffed to my arm. And I would be going to the stock exchange and asking the brokers to sign the ones that they hadn't signed previously. And then if we couldn't find them there, we would be going out to some shack somewhere a couple of streets away from the main area in Jakarta, where you would hopefully find the person that would sign it, that would then eventually mean that you would make your money. So this wasn't trading at the top end of the spectrum. This was just trying to get a job done.
Yeah, and like at Jakarta, I've been there once during the global financial crisis. I know what you mean. I mean, you've been there 20 years earlier, but I remember that main road from the airport to the city center with all the mopeds around, and it's definitely not the place where you want to stop. Probably not in the better times. But so, I mean, one of the things that I wanted to get to is you were there at the age of 21, which, I think is a fairly young age to be sent abroad and run a business for a bank. So how did that come together? I mean, you said you were 18 when you were looking for the first job. I mean, what drove you to make that happen? Was there like an internal drive and you said, I really want to be a banker, I want to trade, this is what I'm really hungry for, and how did this happen?
Yeah, I've always been quite driven. I think sometimes that's one of the things that probably got me into some of the situations that I did over that period. I come from a very working class background. I grew up on a council estate in Watford in England, and my family would never have had a great deal. We had a good childhood, but there wouldn't have been a lot of money around to fritter on anything that was not totally essential. So very working class type of background, but I was always good at school. And my mother would have driven me in that regard in terms of making sure that I was academically sound, and she would have always wanted me to have a better job than she did, more money, upwardly looking in that regard. So she would really have been the driving force. In terms of how I ended up in the world of banking, it was a little bit by default, to be honest with you. Coutts, which is the bank that I went to join, would only have about 12 branches around the UK. You have to be a millionaire to bank there. It's not an organisation you see traditionally on the high street. It's only in it's down in Chelsea and Sloane Street and those sort of areas. So it's not a bank that I would have heard of. So at the school that I was at the time, a few people were applying for a job there. My plan was to go to university, but everybody was applying for this organisation. There was a certain mystique around it and mystery around the organisation. So I applied. 2 people were given interviews, and I was offered a job. So it wasn't kind of the planned career path, but then when you get into that sort of environment, it either is something that interests you or it isn't. And I suppose the one thing that I always loved about the world of finance and the world of banking is, and especially from a trading perspective, is no 2 days are ever the same. You've got to
Yes.
adapt to the circumstances. They're always changing. There's always something different to think about in terms of the way that the markets are moving and reacting to things. And that was what I enjoyed. The reasons why I ended up out in Southeast Asia. I'd been to Japan with Morgan Stanley, so I spent about 3 or 4 months in Japan when I was there. Again, looking at the Nikkei 225 that we were trading at that particular time. I spent a bit of time in Tokyo and in Osaka, and I loved Asia. And when I also get bored quickly, right? So I always found it quite easy I found some of the tasks that I was given at that time quite easy to come to terms with, and when there was a limit to what I could learn or experience, I always wanted to move on. So the reason I ended up in Hong Kong was I basically told the people at Barings I was going to leave unless they found me something that was of interest to me. So the offer at that time was to move down to Sydney and get involved in the futures exchange down there, but they weren't quite ready to upgrade their membership. So they sent me out to Hong Kong to look after this equity issue that they were dealing with. So I was in Hong Kong for a month. We were trying to do what we could from Hong Kong. I think there's this perception Hong Kong is a nicer place in terms of places to live, or was at the time. But for me, coming from the other side of the tracks, growing up on a council estate, Jakarta wasn't that bad either. I had a great time whilst I was down in Jakarta.
Great. So let's looking at your time at the SIMEX. What type of products did you actually trade there? You've mentioned the Nikkei 225, which is also a product that's traded out of Singapore in addition to Japan. Was that the only product you traded, or were there different markets that you were involved in?
The Nikkei was the main one. We had a couple of customers who were clearing through us in Singapore, who were more focused on the euro dollar and the euro yen, but they weren't the things that I was involved in. The JGB started to get a little bit more volume in Singapore, and I certainly assisted with that. I think one of the things at the time, and again, there are so many things that you can touch on when you're describing things that went wrong at that particular time. But the exchange, and you guys will know this because you're from a similar sort of era, the exchange was trying to create a name for themselves, and the things that you look at is you look at the open interest, you look at the volume, and see whether it's really a viable product. And apart from the euro dollar in Singapore at the time, there wasn't anything that was really viable. The Nikkei 225 was trading 2,000 contracts. The JGB, when it started, there might be 50 or 100 contracts going through. They had an MSCI Hong Kong contract that they tried to introduce at one particular point, but none of them were really doing anything from a volume perspective or from an open interest perspective. The thing that happened when fairly soon after we arrived in Singapore is that the Japanese market really started to move downwards. And so all of the circuit breakers were kicking in. I think at the time, if you were down 700 points on the Nikkei 225, that was it. The circuit breakers would stop trading for the day. Everybody, I think, spoofing and layering was a far more common occurrence than I believe it is now. But the market would be limit down for the day because everybody would put sell orders on top. And I think the Nikkei 225 over that early period that I was in Singapore fell from about 39,000 all the way down to the best part of 19,000. But the exchange was always focused on how can we get more volume, how can we get more open interest, and how can we make these products look like people should be getting involved in them. And I kind of, at that time, and this isn't, you're not so conscious of it at the time when it's happening, but for the president of the exchange, I was kind of a godsend because I brought the volume with me, and that volume enabled some of those products at the time to look artificially better than they were. And so he would encourage me to do things that wouldn't be allowed today, but I would have regular meetings with him where he would look for me to do more volume. Some of that volume could even be off exchange, so one particular trader calling me off exchange and then just doing a cross on the market to provide the volume. We won't go into that in too much detail, but there was a lot of that stuff that was going on at the time. So, as much as people talk about systemic breakdowns, this was, like the regulators weren't good, the exchange wasn't particularly good. Barings as an organisation, incompetence and negligence was everywhere. Mine very much at the forefront. I never try to excuse myself of that, but there just wasn't. If you tried to pinpoint one area of the financial markets in Singapore that was totally on their game and totally across everything that was going on at that time, you wouldn't find it. There wasn't one. Like it was a complete breakdown.
Yeah, no, clearly times were very different back then, and still, I guess we still have these breakdowns even nowadays. I want to, so one of the things we talk a lot about when we explain the benefit of being rules-based investors like we are or trend followers is that the fact that these rules help us avoid at least, some of the human biases and emotions like overconfidence and greed and fear, taking control of our decisions. So I want to try and tie that back a little bit to some of the things you went through back then in terms of, as at a young age, how that played into everything. And then I also want to take it up a little bit further and say, if we think about these terms, and now I know you're obviously doing something where you help and advise people, not specifically on what I'm going to ask you, but on similar things, and that is, if investors are looking nowadays, because due diligence is obviously a big thing, and certainly as managers we go through lots of due diligence, but I was just wondering whether there are any signs that if it was you and you were trying to kind of pick a manager to hand over some of your investments to, I mean, what are the things you would look for in a person, in an organization, that might suggest that they're taking too much risk?
Yeah, I mean, I suppose it's a question I've been asked a number of times over the years, and I don't think you're ever going to come up with this series of tests or silver bullet that really is going to that is going to show that. I think the due diligence that you mentioned is obviously quite key, and performance, and just analyzing that performance over a period of time. Everybody can be very successful for a short period of time, but doing it consistently over a long period is obviously very difficult. And the more, obviously, as you've mentioned, the more rule-based that people are, the more disciplined, the more structured, and testing those sort of things. And I think obviously in the era that we live in, there's lots of reviews and things like that. But trying to identify who's going to be the bad apple in the orchard is very, very difficult. And I know lots of I do a lot of stuff that's risk management and compliance related from a conference perspective, and Goldman's and all of these big firms are spending a lot of money trying to work through the data that they have available to them to try and highlight where something is going wrong, and it's costing an awful lot of money, and there's an awful lot of false positives, and it's very, very difficult for these organisations. And I know technology vendors, and we spoke a little bit about the NASDAQ, and this is maybe why they're doing so well, but they always have a solution to something. I think they find solutions to things that aren't necessarily wrong in the first place, or don't really need to be looked at. But there's an awful lot of data that needs to be used, and I think we've probably gone to a stage where people are trying too hard in some aspects in terms of the way that they're mining that data to identify if something's going wrong. I think common sense is a real powerful tool. If the numbers don't add up, or if something looks wrong, it normally is. If the numbers look too good to be true, they usually are.
Seems like that common sense is in short supply, even to this day, as Moritz was commenting, early on in our conversation about, where the markets are and in relationship to the crisis we're in right now. But be that as it may, I mean, I think you're right. And I think that, it is really hard to spot, these kind of risks. And of course, in many respects, even within our industry, which is not, that it is computerized, but it's, we're not talking about machines making the decisions yet. And so you still rely on people at the end of the day, and you still have to sit across people and kind of judge, what kind of person they are and whether they're someone who may be likely to be taking more risks that even they realize. But I can certainly see an even further challenge, and that is as many of our competitors as well starts to move into this AI and machine learning. I mean, how do investors even start to, judge whether these machines are potentially taking too much risk? And I want to tie that into something later. I also want to bring Moritz back to this conversation. So I might come back to this, but certainly just maybe on staying on the things you mentioned. You advise large financial institutions today on critical control functions. I mean, what are the things that you impress upon them? And what are the good and the bad kind of institutions today in terms of them managing their businesses? I think I remember from the last financial crisis we had that some of the Swiss banks were realizing that they were taking the same risk essentially, but they were doing it through 30 plus different business lines without realizing it was the same risk that they were taking. So what are some of the discussions, conversations, topics that you have in your job today?
Well, I think a lot of the things that happened back in my time with Barings, people very much operating in silos. Nobody with that real holistic view of what was going on within the organisation. It's about challenge, and it's about challenging what goes on. We all like to be challenged as individuals, and it's about challenging the organisation as well, and asking the difficult questions. So, like, none of this is particularly scientific or really clever or complex, but it's people having that strength and desire to ask the difficult questions. I think, as you guys know, and as I would have known many years ago, banking can very quickly become a very well-paid, safe environment for a lot of people who work in that middle office area. You're not going to get paid the same sort of money in a different industry, and so a lot of people get themselves into a situation where they don't rock the boat and they don't ask those difficult questions. And I think that wherever you see financial scandal over the last 20 years, even 30 years, it comes down to poor systems, poor controls, and poor quality of people in place to make sure those controls are effective. And again, that comes down to a due diligence side of thing, in terms of how the managers of the operation are performing and how good they are. I think there's been some developments. I like the first line of defense that you see within a lot of banking organizations now, because, and this is a crude response to an answer, but, I've always been asked since I returned from Singapore in 1999, what would have stopped me doing what I did? And the answer really is somebody good who I couldn't divert away from what was going on, and they were prepared to ask me the difficult questions. The problem was, at the time, it was far too easy for me to push people in the wrong direction. As long as I was confident in my response, as ridiculous as it sounded, if I was confident, they believed me. And there were so many different occasions where I would get a phone call from somebody that would, seeking an answer for a question. I would respond with the first thing that came into my head. The majority of the time, it was nonsensical, and I'd be kicking myself 5 minutes later when I was thinking about this stupid response I'd given to somebody. But the confidence that was exhibited was sufficient to get me over the line, which isn't acceptable. There needs to be a proper investigation and interrogation of what's going on within the organisation. But that just didn't exist at Barings at the time. So it is about doing the simple things right. And as you know, and as I know, when the markets are good, people get complacent really, really quickly because everybody's making money. And it's quite easy to look the other way on those occasions. But the risk managers, the compliance officers, as much as you really don't think you need them, you need really good ones to make sure that the business is, is safe, that it's robust, that it's, being challenged effectively. From a personnel perspective, as much as I talk about challenge, you also need to support people and give them the skills that they need to do the job as effectively as they can. That didn't exist at Barings either. It was very much sink or swim. Here's a job, you go and do it. If you do well, we'll pay you a lot of money. If you don't do well, we don't really want to know about it. But there was no management training courses. I was 25 running the operation in Singapore, and I had no real management expertise or experience at that time. And so, my relationships with my employees and with the people that I worked for weren't right. And, there was no correct delineation or differentiation between me and the people that worked for me. And that led to a lot of the bad decision making. I can give you so many different reasons why, some of this poor decision making existed at the time, but it doesn't, and none of them are an attempt to excuse what happened, because they were all my decisions, and there was nobody else that influenced them in any way or shape or form. But if you have the right controls, if you have the right structures, if you have the right people in the right places, you can mitigate for that, almost entirely. And the CEO of the organisation obviously will or should heavily impact or influence the conduct and culture that exists within the organisation. So it's just about getting all of those things right. And like I said, there is no silver bullet. There is no technology that's going to keep you completely safe. There has to be a human oversight that is grounded in common sense that asks those difficult questions.
Yeah. What's on your mind, Moritz?
Many things. This is very interesting. What I wanted to get to, Nick, is the point, and correct me if what I'm saying is not right, but I think when you were on the SIMEX, you were handling client orders, meaning you were executing orders, clients were sending in orders, you were trading them on the floor, and then as I read, that accident happened. Where somebody traded the other side, and you firstly initiated the 5/8 account to correct the loss that resulted from that position. Now, the 5/8 account is now obviously a prop trading account because there's no more client orders going into that account. You wanted to get rid of those losses. How was your thinking there? I mean, how was your trade? Was there any trading process? How were you thinking about getting, trading the markets in order to get that account back into the black?
It's a difficult one. At first, the losses were quite small, and you could close a position, and you could do whatever, or you could certainly go through the thought process of how you're going to extricate yourself from that situation. So, in later months, options became involved. So I'll just take you through it. In those early stages, when the losses were still quite small, I'd have a statement that would arrive on my desk. It wasn't the hidden account that everybody describes it as, like everybody in the office would see the documentation, and it would be obviously it would impact on the balance sheet as well. But there would be a statement on my desk in the morning that would show the position, and I would try to at least think about how I was going to trade my way out of that during the day. So initially it was futures contracts. So there were two things that were going on. On the one hand, we've got rollovers from month to month in the contracts that in the Nikkei 225 that I'm executing for some of the guys on the trading desk in Japan. So those still have to continue at pace. So there were situations where those, and most of the time I was just legging into them, so there's no, this is not computer traded. You can go down and you can ask for a price in the June-September spread, and that might I'm thinking back to what the price might have been at the time, but it's probably 120, 125 if you wanted to trade in any size. But obviously our traders were looking for something that was a better price. So I would leg into some of those contracts when you saw the size there. Now every now and again I'd get caught out on one or two of those, and that would also find itself its way into the 5/8 account after it was initiated, after that initial loss. So there were occasions where the position would build as well. By the end of 92, that I think the loss in the 5/8 account had escalated as much as nearly $5 million. And that needed to, and there were ways that I had to get past that from an accounting perspective, which you're probably not too interested in at this time. Then the advent of options came into the market. And I can't tell you exactly at what point this was. The position got too big. And the position certainly superseded my ability to extricate myself from the position. And I think at that point, if you haven't been there already, you're the rabbit in the headlights, and you don't really know what you're supposed to do from that particular point. And the way that I describe that in later years is, rather than having a choice every day when you went into the market and possibly flipping the trade around and taking the opposite side of the position, it just became protection. So if I was long, I was going to be long at the end of the day. And if the position had built up during the course of the day, that was a consequence of trying to protect this position. And there were ways that you could do that, and some of it would go back to that spoofing and layering that I spoke about a little bit before. I would put buy orders in Japan in order to try, and the Japanese market wouldn't open, so the Singaporean market became the lead market. And every now and again, I'd get caught on one of those positions, and the position at some point, and it was early on, to be honest, at some point the position just became too big, and that element of choice was taken out. So the way that I try and describe that from a visualization perspective now is I didn't even want to see the statement after a while, because the statement got too big, and I wasn't even thinking about how I was going to trade myself out of that position. It was now about options and shorting options and having that eureka moment where the expiry would be somewhere around the strike price that I had on from an options perspective. Because the thing that then probably took over control was the options, and where SIMEX made their big mistake with the options contracts at that time was that if you sold options, you received 100% of the premium. That was the way that I could keep my 5/8. The only time that anybody looked at the balance sheet was the last day of the month. So there was a Barings futures balance sheet, and there was a Barings securities, which was the group balance sheet, if you like, in Singapore. And the only way, or the only day that the Barings futures was incorporated within the group balance sheet was the last day of the month. So on the last day of the month, the 5/8 account balance had to be zero. Otherwise, the account line would not agree. So it became, it wasn't so much a trading account as it became a cash play in that at the end of every single month, the 5/8 account balance had to be zero. So if you can imagine that if January options might expire and there would be a huge loss realized in the 5/8 account, and then I would have to sell February options in order to plug the gap that was left by that loss that materialized. So it was just really surviving month by month, and that definitely by that point it was just really a case of surviving month by month.
Interesting. So I didn't know that. So, but you were selling those straddles or strangles, I presume, in order to get the premium up front, and then you used that premium to settle and balance out the 5/8 account. And understood. So what I also learned, and I'm not sure if this is true, but it seems that at one point when the losses were still smaller, you had this fortunate occasion where the account did balance out, and you had like a way out, because I was reading on the internet, it was something like 6 million, and you were able to make that 6 million back, and all of a sudden the 5/8 account was flat. That would have been the opportunity to just say, "Whew, Lucky me, nobody noticed. Let's never go down that path again and just, step away from it.
Yeah, absolutely. And that period was May of 1993, and the loss had been up to $20 million. So it was a bit more than you alluded to. So in May of 1993, and I don't think I actually put any strangles positions on. I think everything was a straddle. And one of the questions you often get asked from a trading perspective is, why did you choose straddles? And this is where I mean it's more of a cash play. Is straddles are obviously the most expensive, or at the money straddles are the most expensive. And if I needed to plug the hole, I would have to sell fewer straddles to bring the account balance back down to zero. So it was simply a cash play at that particular point. So it was May of 1993. I don't know exactly where the market was, but if it was at 19,000, the expiry, which I think was the first Friday of the month, would have been at 19,005. So the 20 million, so there was 20,250,000 pounds worth of profit. So I had the opposite problem. It's a Friday. I've got to get rid of $250,000, which somebody took it on their trading book in Tokyo. And that was it. Genuinely, as you imagined, that's my get out of jail free card. Going home for the weekend. I'm gonna celebrate, and on Monday everything's gonna be different. The problem is that I have not changed. The people who work for me haven't changed. The systems, the controls, everything that's happening on the trading floor, none of that has changed. And there has to be a catalyst for change, and it should have been me, and it just didn't happen. So on the Monday morning, we go back onto the trading floor. What would have been the best thing for me to do was leave and just disappear at that particular point, because we're back to ground zero. Right, there was a loss. The loss has now been made back, and nobody's really going to create too much of a storm about it at that particular point. The problem was that I still had this belief in my ability, and the hardest thing throughout all of this, from a personal perspective, was telling those closest to me what was going on, because then that's an admittance of failure and the fact that you're failing. As much as I had a short business career, it was all built on success and being successful. And the one thing that I couldn't enunciate at that time was the fact that I was failing. And in order not to go back on that trading floor on the Monday morning, I would have had to go through that process. And, I didn't do that throughout any of the period that I was in Singapore. And it's announcing that failure to those closest to you is the hardest thing. And I think it's harder for men anyway, but just doing it for anybody is difficult. So I went back to the trading floor on the Monday morning. The opening bell happened. The guys would be trading because everything was manual, and the order fillers would be in the pit. They've never been reprimanded. They've never been admonished for the 7 or 8 months prior to that occasion. So they go straight back in, as they did on Friday. They do the same things on Monday. They make mistakes. There might be an order that's overfilled or underfilled. We have to make the client good, and it goes back into the 5/8 account because nothing's changed. So there has to be there has to be that catalyst for change, and unfortunately, it didn't happen. But if I'd if and you don't get your time again. So like wishful thinking for me is one of the most negative things that you do. So I don't go through these processes where I think I wish I did that, or I'd wish I did. And traders know this as well. Like there's no point in you thinking about what you should have done with a trade. You've got to deal with the reality of what you did do, and then work your way forward from that particular point. It's great to go back and look at things and say, okay, this is the way that I should have reacted, and I've done a lot of that over that time, but not in a wishful thinking sort of vein, my life would have, woe is me, my life would have been really, really different if only I'd done this. The fact is I didn't do that. This is what I did, and I've got to move forward and deal with that from that particular time. But yeah, you're right. Look, $20 million of a loss, $20,250,000 of $250,000 worth of profit, and I was I was out the gap at that particular point, but naive and stupid is that I don't like calling myself stupid too often, but stupid enough to go back onto the trading floor on Monday morning. Why? Because I couldn't tell anybody what had gone on before, and it's that personal failing, and as much and I speak about this a lot, but as much as I was postponing the realization of the losses throughout the 3 year period, for me personally, I was postponing the realization of my own failure.
I think that makes a lot of sense, Nick. I mean, one of the things, and I'm not entirely sure whether, when you say you had made it all back, whether that meant that these were kind of paper profits, meaning you still had huge positions on that you, at that time, maybe you could get out of them, but later I think your positions were so big anyways that you couldn't do anything. You were the market. I mean, as you said, you brought the market to the exchange. I mean, you were the market, and therefore there's no way you could get out of these massive positions. And that brings me to another kind of point that I wanted to maybe tie into a little bit about what is going on today, because I think that people often underestimate the risk of liquidity, or rather lack of liquidity. And that's one of my worries today, is that you see more and more investors in search for yield, basically go out in other types of risks that may not be easy to get out of, such as liquidity risks. I mean, we come from the futures markets, the three of us, so I think we're, have always been fortunate to deal with very liquid markets. Except for the fact that you found yourself in a situation where you were the market. So I understand that you can get into that. But generally speaking, of course, futures are very liquid. But nowadays you see people get into all sorts of stuff, including off-exchange stuff. And then when, like we saw in March, when something goes bad, a lot of these things, there simply isn't any liquidity for people to get out. So what's kind of been your or is that something you think about and talk about when you talk to your clients today, in terms of about those kind of risk, set aside from internal controls and all that stuff, but I mean, just something as basic as you need to trade stuff that really is truly liquid?
Yeah, look, I think it's a fundamental thing. As you explained, I certainly got myself into a situation where I was at least half of the market, or fairly close to half of the market, especially with the options positions that I had. And so every time I stepped into the market was heavily skewed by the options market makers. They knew what side I was, and they were going to hold me to ransom all of the time. And it's just that basic demand and supply type scenarios. But yeah, you need markets that are as liquid as they possibly can be. I still trade a little bit these days, and you can see that there is a limit to the amount of liquidity in certain markets at certain times, and that's when it becomes very dangerous. And I think for the non-professional investor to understand that, I think is key. But as you said, trading those most liquid markets is the way to keep yourself safe. There's no point having a great entry point if you can't get out of the trade.
Do you think the fact that futures exchanges have essentially gone off exchange now, it's electronic, and there aren't the pits anymore? I mean, do you think that makes markets more or less liquid, actually?
I don't know. I think it makes them safer. I think it makes them more transparent. I think there are definitely, maybe there's, I mean, you guys would be closer to that than me in terms of the actual futures markets. Um, I think it's a positive development. I mean, everything that I used to, if you go back to the 90s, there would always be the comments about derivatives being weapons of mass destruction, and yes, in the wrong hands they can be, I suppose, as I proved, and there's a number of people have proved since that time. But that's not the way that it should be. I mean, it's about using them efficiently. It's about using them intelligently. And I think since it's gone on, since the futures markets have gone off exchange or on screen, whichever way you want to describe that, I think it's been a positive development, and easier to control. I mean, there was lots of stuff that we used to do back in the day that I'm sure still goes on from in a similar, well, not in a similar way, but it goes on in some shape or form now. But it's not as blatant as an abuse as it used to be. I mean, we were always trying to trigger stops. Everybody was at that game in the markets, and the problem is when you have too many humans standing around, there's a certain amount that goes on dependent on who you know and who's holding what. So I think that migration onto being an online platform has been a positive development. I mean, I used to get away with a few things on the floor that were definitely flouting the rules, spoofing and layering. It was rife in Japan at the time. It's obviously highly illegal these days, and I think the more transparent the markets can be, the better.
Yeah, which actually, in a sense, is a good thing about kind of the strategies we operate, that they are completely transparent and liquid. And I think you're right. I mean, I think behavior, conduct, culture, I mean, these are really important things. And maybe also in a sense, where the markets are trading. I mean, we're close to all-time highs again, believe it or not. And I don't know whether these short-term rewards that we see, not just in the trading world, but we talk about, corporations and their quarterly earnings and share buybacks and all of that. I mean, this short-termism, seems to potentially encourage wrongdoing. I was curious, actually, Nick, whether you follow some of the kind of other scandals that have happened, whether they catch your attention from time to time, and whether you see any similarities. I mean, many of these traders simply, as you say, naive, immature, and maybe they're too worried about their status? I mean, are these kind of common traits that you see, if indeed you have been following these kind of things?
Yeah, look, I'm definitely not a student of of all of these financial scandals that occur. Obviously, when they start to surface, people often phone me to see if there's any similarities. Do I have any sympathy? Do I have any empathy? I don't have any sympathy or empathy. I knew what I was doing. I knew I shouldn't be doing it, and I continued. And for those reasons, I was rightly punished and sent to jail. I don't have an issue with that. It was my wrongdoing at that particular time. And I think anybody who works in the financial services industry or in the world of finance is intelligent. They know the difference between right and wrong, and when you're going down that wrong path. So, trying to blame it on the bank or some control element that existed at that time is wrong. I think the banks are very good at deflecting blame for a period of time, and I understand why they do it. The attention goes on the individual because it detracts from some of the shortcomings that exist within the bank at that particular time. But there was a phrase that I think probably is that you used in one of your last sentences, and that was, or there's a word, and the word is status. I speak a lot about success and my need for success and being very focused on that. I wrote a book with a psychologist a few years ago, and he doesn't look at it as in terms of success. He uses the word status, and so within the organisation and within my domestic situation at the time, I had a certain amount of status, and all of those status relationships became too important for me, and I couldn't let any of them down. So he uses a phrase at the end of the first chapter, which is about status, which says, when an immature person has status, they will do anything, absolutely anything, to protect it. And that's kind of where I think I was at that time. From a business perspective, either massively immature or relatively immature. We'll leave that one open to your viewers' decision, but certainly immature. Whether it was success or status or just a fear of failure, I wasn't able to overcome that situation. And those are the sort of, as much as you can talk from an organizational perspective in terms of how people can improve. There's a lot of personal psychological stuff that needs to be focused on as well.
And the interesting thing I find about these situations is that I think that when you do confront you kind of your bad behavior or your losses and you correct them, I think it's true that most people are able to move forward. Whether it's in your career or whether it's like we as a trader, we have our stops. We take our stops. We take our loss, and we wait for the next trade to kind of come around. And it's not really about being right or wrong. It's about staying in the game and being able to trade for another day. Again, I want to bring Moritz in. We're trying here. We have maybe different lines of questions, but Moritz, where are you on your list of questions for Nick?
Yeah, I don't have a particular list. We're just going with the flow. But you've mentioned, Nick, that you're trading a bit for yourself these days. I just wanted to ask, how do you trade? And what do you think are the most important aspects to successful trading?
Well, I think as you've mentioned already in some of the things at the beginning, I think being quite rule based is important. I think it's always good, as Niels was saying, to learn from your experiences and from your mistakes. And I was never the most disciplined. I was never the most structured. So the more rule based I become, the safer that makes my trading. I trade indices, so the two that I'm more involved in at the moment are the DAX and the Dow, and it's just simply because there's more volatility. So I'm not not really into trading currencies and things like that. So I'm not that diverse. I know I listened to your introductions at the beginning, so I'm certainly not as diverse as you two guys. It really is just the indices, and it's I think one of the things that I learned from my own personal perspective many years ago, and you guys will manage this very differently. To me, one of my biggest problems was the carrying a position, and how that influenced my thought processes. So I'm very much day trading. I'm very much focused on what the market's going to do today. Not really too bothered about what it does tomorrow or next week. It's really just having that, and I call it, my blank piece of paper. I start each day with that blank piece of paper and have choice, which is not, I never had choice at Barings. Now it was, that was of my making, but every morning when I get up and I'm looking to do something in the market, it's about what I'm doing today. So it's free choice first thing in the morning. Now, once I initiate that position, sometimes I have to manage them through the day, but I don't carry anything overnight. So, I know the things that got me into the mess that I did years ago, and I tried to address those. Prison was, I spent 4.5 years in prison between Germany and Singapore as well. So from a personal perspective, I looked at lots of situations that I got myself into, decisions that I made, and have really scrutinised those. And you have to pull back the veneer, and I think Niels was mentioning this in his statement just prior to this. You know, you pull back the veneer, you come to the conclusion after doing all of that in Singapore, and I used to keep notes and look at situations that I'd found myself in and the way that I reacted to them, and really came to the conclusion that I didn't like myself, and that you really need to start rebuilding from that point. But unless you really pull back that veneer and hit that bottom level, it's impossible to rebuild yourself. But from a trading perspective, it's working out. You know, it is again identifying the things that went wrong for you in the past, and adapting. And I think trading the conditions is, you know, there's lots of schooling out there, and there's lots of schools of thought from a technical perspective in terms of the way that people trade, but you also have to trade the conditions, and the conditions at the moment are slightly unusual, to say the least. You know, volatility's gone sky high and is now coming back. I think the markets are reverting to some form of normality at the moment. I don't know if you agree with that, but you know, volatility's down to about 27 now, 28, 27, 28. Still very high, but it's a lot lower than it was.
I guess the beautiful thing about being a trend follower, we don't really worry too much about, you know, normality in the markets or anything like that. I wanted maybe also to kind of round up my questions and sort of inspired by you know, what you just said in response to Moritz's question. I had a couple of things I wanted to kind of finish off with. One is that, I mean, at a young age, you certainly have been dealing with immense pressure for a long period of time. And I was curious as to how that may have impacted you, and maybe how it impacts you today, and maybe some of the things you've done to work on your own mindset to move forward. And then, of course, I did hear you talk on another podcast about your time in the Singapore prisons service, so to speak. And maybe just for the audience, I think it could be interesting just to give them a little bit of an insight, because that didn't sound like a very nice environment to be in terms of you know, the triads, I guess, were one of the things I caught up, and just the way that you were asked to kind of sleep and all of those things. But I'm sure you know what I refer to. I think that just talk a little bit about that as well. I think it shows people that you have certainly also you know, dealt with some rough situations and not just the high flying life in Singapore, so to speak.
Yeah, I mean, I wrote a book on stress many years ago, and part of the reason was I suppose I went through most of life's stressful events in a very short period of time, and you know, there was no. I think we all have an innate ability to cope with everything that we're going to face in life. It's not readily apparent where it is or where it's going to come from, but I think that it exists, and it's only sometimes when you're in those most difficult situations that it comes to the forefront. When I was in Singapore and Barings was, or I was working at Barings, the coping strategies weren't good. You know, there was a lot of alcohol. It was all about avoidance, and alcohol was just another way of avoiding what was going on at the time. So, you know, that had its own impact. And whilst you look at those extreme levels of stress, not living my life particularly well, you know, eating a lot of the wrong foods, drinking too much. All of that, in my opinion, led to the onset of cancer, which I had whilst I was in prison in Singapore. So I had colon cancer. So it's very much a consequence of the way that I was living my life. But it certainly wasn't a good way to cope with the situation, but it was the only way that I knew how at that time. And as I've said, it was all about avoidance and avoiding what was going on and avoiding telling anybody what was really happening. Prison was very, very tough. I was in prison in Germany, in Frankfurt, for 9 months before I went back to Singapore. And it was a bit of a stepping stone down into what Singapore was going to be like. Singapore was a lot tougher. It's very hot, as you can imagine, all day, every day. You sleep on the floor, which is very rough and uneven. There's 3 people to a cell, and a cell would be 6 foot by 9 foot, so there's not a great deal of room. You're locked up for 23 hours a day. But again, that's a consequence of your actions. That's not something that I'm going to gripe or complain about. It's it was what was put in front of you and what you have to overcome. And unfortunately, I got ill whilst I was in prison in Singapore as well. So you have to go through that process. And strangely enough, it made me a little bit more resolute to complete the sentence and come out stronger. Just because everybody was expecting me to be ill, and I think certainly for a while they thought I was going to die. I had an emergency operation to remove a tumor that was 7 centimeters by 10 centimeters, and then still had 8 months of my sentence left to go. So I had to rebuild, and you visualize things very differently. I had chemotherapy whilst I was in prison in Singapore, so you just visualize through sweating and through exercising. I was visualizing the drug going through me. In terms of messages or things that stay with me from that time, prison, just because you were so much controlled, it was very regimental. The thing that it taught me more than anything else was there's things in your life you can influence, and there's things in life that you can't influence. And so very much now I focus on the things that I can influence, and don't worry about the other things.
Yeah, no, that makes total sense. And we're told by many people, we're told that what doesn't kill us makes us stronger, and of course we should all learn from our mistakes and not repeat them. So you mentioned you had kids, and my final question is just what's kind of the key things things you try to impress upon them based on your experience so far in life?
Well, I mean, simple things really. It's that they know of my history now, and how situations can get out of control. So, I tell them to, we all obviously teach our children the difference between right and wrong, but I always encourage them to communicate. I think communication is a hugely powerful tool, both for an organisation and for an individual. So I always encourage them to talk, never to feel ashamed of expressing themselves. I think far too many children keep stuff in, as I did many years ago, and the rate of suicide that we see in lots of different countries is far too high. And I think the more that people communicate and share their feelings and feel empowered and strong enough to be able to do that, the better your family, society will be in the long term. And I always, we all have different experiences. We've all been through different things. You guys have chosen the right path. I've chosen the wrong path from time to time. But we have that experience. And so I always encourage them to ask for help and advice, because that's what we're there for. And we can steer them in the right direction. And if they've done something wrong, they'll be punished for a short period of time, but it's not going to last forever. And it's, just don't hold any, or don't not hide, don't hold anything back, but always communicate. I think communication is very, very powerful.
Yeah, no, absolutely. I'm sure you might have some final thoughts, Moritz, before we dive into those. Maybe I'm just going to do a quick run through on the where we ended up the week, or at least by Thursday evening, in terms of the indices we track here every week. Beta 50 index up 0.33 for the month so far, down 1.51 for the year. The SocGen CTA index up 0.25% and pretty flat for the year so far. The SocGen Trend Index up about 0.5% and up 3% for the year. The SocGen Short-Term Traders Index down about 20 bips so far in May and up 3.69% for the year. And that's about it for now, at least. Any final thoughts from you, Moritz? Questions, and of course from you, Nick. Any final thoughts before we wrap up?
Yeah, I wanted to bring up one thing, Nick. What's like your day-to-day business or what you're doing today. I saw on the web that you're running a website called Bull and Bear Capital, or Bull and Bear Cap, I think it is called. And maybe you want to tell us a little bit more about what it is that you're doing there.
Yeah, it's just a mentoring service, really, Moritz. One of the things I suppose that's exploded over the last few years, or maybe the last decade or so, is the amount of retail trading that goes on. I think the thing that I find quite unsavoury with it over the last few years is the marketing. So it's those those guys who put themselves out there with a picture of a Ferrari and the idea that it's easy to make money. It's not easy to make money. So lots of people have difficulties with some of the psychology around the trading. That's really where it's geared at a little bit more. People who are experiencing problems with the way that they trade and maybe are looking for a little bit of a steer in regards to some of that. So, people not taking losses when they should. I mean, it's probably the complete opposite of everything that you guys do, because the retail traders aren't that structured. They're not that rule-based, and you tend to find that they get themselves into a lot of trouble very, very quickly. And there's a lot of misleading advertising. So there's no misleading advertising with me. I think my history is, goes before me. So it's just there as a form of mentoring. Different people need different things, and it's geared more towards that retail space.
Maybe one point that when you go out and you meet people and see people, I mean, is it all about, hey, Nick, tell me the story about Singapore. Hey, Nick, tell me about this. Hey, Nick, how did you lose that much money? Hey, Nick, here's the Barings Bank. I mean, how often does it happen? And I guess that would be a nice thing. It's just like, hey, Nick, we'll have a barbecue, have a beer. Let's talk about, I don't know what, Manchester City or, some other stuff, but none of that trading stuff. I mean, does that happen because you're such a, in that limelight of what happened? It's, like Niels and I mean, obviously we're asking you questions about that history, but, does it happen that it's just, normal talk?
Yeah, sure it does. I mean, like I do a lot of speaking around the world. So you go through, you have to go through a certain amount of that, but then life is fairly normal outside of that, to be honest. So I'd be well known around where I live in Galway in Ireland. But yeah, I mean, there's this, like, and I don't mind talking about it. It's not like this big emotional bag that I carry around with me. I think I've gone through the process, and when you look at some of the other road trading episodes and the other people who've been involved, you do worry that the more that you blame other people, I think you've not really dealt with the situation and really accepted what you did. And that acceptance, that responsibility is part of the way you build yourself for going forward. So, I don't mind answering the questions. Like if we were out for a few beers in town and there were too many questions, I'd probably tell you to be quiet after a while, and we'll do something else. We'll watch the match or do something in that regard. So I'm as normal today as I was. I don't know if that's fair to say that I was normal all those years ago, because obviously my history precedes me. But yeah, look, behaviour exists on a continuum, right? I'm not massively different to the way that I was back in 1995, but there is a good end to the spectrum and there's a bad end, and I have to appreciate that I was at the bad end of that spectrum many years ago, and I've moved myself closer to the good end. I don't think I'm at it, I'm somewhere in between. But yeah, look, I'm very normal. I've always been quite, and this is strange when you've lost 862 million pounds, but I would describe myself as quite rational, quite realistic about things. I don't believe in all of the press and good or bad. And I have a very normal life. I head over to Manchester to see the football, and I'll be out for a few beers at the weekend. Well, you can't go anywhere for beer at the moment, but maybe in future I'll be able to do that again.
And of course, you had Ewan McGregor play you, which not everyone can say.
I'm a bit disappointed. I think they could have got somebody better looking. It's weird. I mean, when I stand up to talk, that's my first apology, and I have to apologize to the women in the room that I look nothing like him. But he doesn't know the story as well as I do.
Indeed. Well, we certainly appreciate you coming on today and talking about your story and all the things that, in a sense, we can all learn from it. And, as you say, we're all work in progress, so to speak. I think on that note, I'm going to wrap up this week's conversation. Nick, it's been really good having you on the show, and we appreciate your views and certainly your insights. And we hope that our listeners have had an interesting kind of different episode today, but nevertheless a really interesting conversation, I thought. From Moritz, Nick, and me, thanks so much for listening, and we look forward to being back with you next week. In the meantime, stay safe and healthy, and take care.
Thanks for listening to the Systematic Investor podcast series. If you enjoy this series, go on over to iTunes and leave an honest rating and review. And be sure to listen to all the other episodes from Top Traders Unplugged. If you have questions about systematic investing, send us an email with the word question in the subject line to info@toptradersunplugged.com, and we'll try to get it on the show. And remember, all the discussion that we have about investment performance is about the past, and past performance does not guarantee or even infer anything about future performance. Also understand that there's a significant risk of financial loss with all investment strategies, and you need to request and understand the specific risks from the investment manager about their products before you make investment decisions. Thanks for spending some of your valuable time with us, and we'll see you on the next episode of The Systematic Investor.